welcome to Scrolling with Ceazor. Today is August 6th, 2026. Now I've got a few tweets for you today, but I'm going to try to rip through these really quick because, yeah, I don't have a lot of time. I got a lot of stuff I need to do today, so let's get this done and get it done fast. Okay, so as always, though, this is not financial advice, just me talking hot air. So taking a look at the charts today, everything's kind of sideways, just kind of no movement a lot. Gold had a nice pump yesterday, but it's solid sideways today. ETH, everything's kind of normal. Sonic is 1% up, but it's still looking bleak. Hype is down 2%, but still quite nicely in range there. Now taking a quick look at I did open these positions on Ramses, on Robinhood with Meta. So I assessed Meta and I thought that this was a good time to open an LP position, stablecoins below and Meta tokens above, hoping to get some volume and some trading fees as well as, sell out. So Google's still inside my range, but I don't have a lot of money there anymore. And I also decided to open a Tesla position. So it's kind of still sitting in range as well. I think it's okay. I'm going to open this up a little bit so I can see it a little better. So yeah, I'm thinking that both Tesla and Meta will recover their oversoldness. Meta kind of it was down. It would have been nicer to open up down here, that's for sure, but I missed that. So here I am looking at it now and thinking it's a pretty good opportunity. If it does come back down, I don't think it's going to go below this point. So it'll bounce around in this range, get me some more tokens and then some trading fees and then sell them as well. So let's open this up a little bit. So that's it for that. Let's kind of move on to some other things today. Okay, so the first thing we have here is we have Alchemix has these like bonds. I call them bonds, but they're not. They're called them fixed rate transmuter yields. Okay, on Mainnet as well as Optimism. I'll open up the kind of chart and show you. But basically, what you can consider these is they're like fixed term bonds, paying this much. So what you do is you go to the place where you're gonna do this. You buy LUSD on chain, ALUSD or ALETH. You stick it into the transmuter, and then in 6 months, you get 1-to-1. So the price, this APY, it's not really APY because it's instant. Basically, if you go to buy a USD right now from the market, you're gonna get more than $1 on $1 because it's below peg. It's worth like 98 cents or 97 cents or whatever it is right now. So you're going to get cheaper AUSD, but when it transmutes, you get 1-to-1. So it's like a lower side price below peg arbitrage opportunity, but it takes time. So there is an exit fee if you want to exit early of 2.5%, but don't do that. Okay, find amount of money that you're okay with locking in here for 7 months, or in case of ETH 6 months, and stick it in there, and then be done with it, right? And get out. So if you do look at the website, here are the opportunities for USDC. So as you can see, this one's full on Arbitrum, but Optimism as well as Mainnet ETH, you can get about this percent. Now this, like I said, this number considers the fact that ALUSD is off peg, below peg. Okay. And then ETH has some pretty juicy yields as well. If you have some ETH on one of these chains, you can stick it in here and get a pretty good return on, but it's a 6 months wait, okay? So yeah, so consider that, think about that, see if you want to do that or not, okay? DeFi Saver dropped this thing yesterday. They tagged me and I kind of looked at it and I was like, oh, this is kind of cool. So I thought I'd share it. Basically what it does is it scans your wallet for any kind of power you have. So basically the first thing it's going to look at, it's going to tell you if there's rewards, like Merkle rewards for that wallet to claim and stuff like that. But it's also going to check if that wallet is the owner or the signer of a safe, and if there's some assets in that safe, because some people put money into safes and into other smart contract wallets and they forgot about it. So you can just stick your wallets in here, and then you might find yourself that you've got some tokens that you've forgotten about. So it's worth checking out. I think it's it's kind of cool, and I think there's some airdrop scanning as well, but I'm not sure. Double check it. Okay, Sonic tweeted this out. And I was looking at it, and it's kind of interesting. So this guy here has a talk about like gas abstraction. He's like, USDC is better to use US dollars because most people think in US dollars, and if you're holding your value in US dollar terms, denominated in US dollars, then you might want to hold US dollars to pay gas, because then you just like you understand, oh, I just need to pay gas, and it costs this many dollars every time I pay gas, and I don't need to speculate on the gas token price, right? So that's like kind of the idea of using USDC. But what Sonic is talking about is like, let's try to like natively into the chain build gas sponsorship protocol, so that dApps, if they want, they can sponsor the gas for every user, and then users never even have to understand that gas is a thing, which is awesome, which I think is pretty cool. Okay, moving on. So Ivan of Lobster DAO, he dropped his Lobster Substack on his thoughts on the ETH EIP issuance debate right now that's going on. And you can kind of read through this and kind of take his take on it. There's a few takes out there. Number one is like, people think it's just a waste of time. We've got more important things to do. People are against it because they think, it's going to mess up DeFi. It's going to screw around with all kinds of stuff. And if once you change it once, then you can change. People will know that you can change it anytime, right? And that you will change it anytime, right? So that, and then there's the people who are for it, who are like, there's all these institutions are just looping up LSTs or staking, and they're just farming the ETH and dumping it all for fiat. So and then there's also the scare of like a large amount of ETH being staked, and then there not being much ETH anywhere else, which I don't think is a real issue. But anyhow, you can read through this. I'm going to read through this later. I haven't read through it, but I know Ivan's got some deep thoughts on this, as always, and I think it would be worth reading through his thoughts on it. Okay, so Frax Force drops their bi-weekly report here. You can click on this and open it up and read through it in details. But here is the TLDR. Is Sam went on the roll-up and talked about stuff. Aave v4 FRX deposits are up 50% in the past month. FRX USD is supported on Cloudflare wallets. The Theseus AI network is using FRX USD as the default payment for the agents. Curve DAO. So LlamaLand V2 is now live with SFRX as collateral on day one. LeFi and Kyber Network now have FRX swap, so Frax swap pools in their routing. StakeDAO has a whole bunch of opportunities for FRX USD that are printing pretty good APYs. You can go check them out, do some due diligence. And then I don't know what this is. Frax Force Moment, our on-chain cash, shows it featured multiple times. I gotta dig into a little bit deeper and find out what that is. Okay, so moving on. So Pendle now supports SBold. SBold is it's like Yearnbold. Basically, you deposit your bold in there, and K3 Capital puts the bold into the different stability pools and rebalances them so that you get the best APY possible. Now you can use this SBold on Pendle to either do some PT tokens, which is basically like a bond that matures in February of 2027. Or you can do the yield tokens, and let's read through this. Leveraged exposure to variable leg rates. So the rates, because these rates can change, right? People can change their APR rates, right? On liquidity, it's fixed, but you decide when you want to change it, right? Or you can pay whatever you want, right? But you're just more likely to get redeemed. So liquidations and airdrops, all of these are kind of like just boosted if you're going to do some yield token holding instead. Or you can LP both of them, earn your SBold yield, right? And then also get some swap fees for the people who want to swap between these two opportunities. So I'm a big fan of Pendle. I like PT tokens. I like to search them. Look at the PT tokens and decide, is the APR good? Is this a good bond for me? And then I decide whether or not I want to do that. Okay, so Polaris dropped their documentation. You can read through it now in depth and have a deeper understanding of what this thing is and what it's going to build. I will do a video on it in the near future once I have some time, but I just haven't had any time to actually. I read through the original docs, but I'll have to read through this and then organize my thoughts into a secret sandwich, or snack sandwich video. Okay. But if you don't want to wait for my video, you can check out DeFi Dad, sorry. And he on the Edge Pod with Nomadic, they talked to the founder of Polaris. Here he is right here, and he kind of TLDRs a lot of things on it, so you can watch that instead if you don't want to wait for me. The last thing I'm going to talk about today is this Guinoyama Lambert, right? So Lambert, he's got this long tweet here about the fee switch on Uniswap, and you can go through and get all of his data and stuff like that. But basically, he's like, let me read this. And are additive fees materially different from inclusive fees? The answer is no. See why below. So Uniswap adding this fee switch, and basically what they're defending it is, if you're an LP, you're not losing any of your fees. If you set your fees to 0.3% an LP, you will earn 0.3% of the swaps that go through your pool, right? However, what they do is then they add another percent on top of it, or whatever. Let's say they're adding 2 basis points. So then they add your fee is you're charging 0.3, but Uniswap is charging 0.2. So the pool is charging 0.5. So it's less likely to get routed. Pool swaps are less likely to go through it. The pool's less likely to get arbitraged, because if the price doesn't move more than 0.5%, then it won't have any arbitrage opportunities, and it won't get arbed, and then also like routing will just not use that pool as well. So it doesn't make any sense to me, but you can read through this and get all his data, all his numbers. He's deep dive into this concept as I understand it. So that's it for today. Hope this has been interesting, useful. Thank you for listening, and goodbye.